The United States is the largest debtor nation in the history of the world. I don't like that, but it's a fact. I have to deal with that. 40 years ago, America was still a creditor nation. So changes are taking place, and the world, if you want to be successful, you have to recognize changes and adapt to those changes. Do I like the fact that America is the largest debtor nation in the history of the world? No, I have two teenage children, but those are facts, and we have to deal with it.
Jim Rogers, a renowned investor and financial commentator, have been a strong proponent of the idea that America is facing a debt crisis. Rogers has been sounding the alarm that the United States is facing a debt crisis unlike anything the country has ever seen before. He believes it's here right now, and we have to face it and deal with it. With the nation's debt rising to unprecedented levels, Rogers is urging Americans to get their finances in order and take steps to protect their wealth before the situation spirals out of control. From Rogers' statement, it's believed that the next few years will be critical in getting the country's finances back on track and avoiding an economic catastrophe. With the right preparation, many of the economic burdens Americans are facing can be avoided, so it's better to take action now to ensure a better financial future. According to Rogers, America is the largest debtor nation in the history of the world. Things weren't like these before for America, as they were once a creditor nation 40 years ago. However, things seem to have changed erratically. This is something many Americans aren't happy about, and Rogers also mentions he isn't happy about it. These would affect the millennials and Generation Z citizens, and it's not something many baby boomers would want their teenage children to face. Welcome to Savvy Finance. In today's video, Jim Rogers discusses America facing a dire debt crisis and how we can navigate the changing landscape of investing in the world. Please watch, like, and share this video. Also, drop your comments and thoughts below, and remember to subscribe to the channel for more related content similar to this. Without further ado, let's dive right in. We begin with a short clip of Jim Rogers.
But you wouldn't know what to do. So please, if you want to be successful, stay with what you know. And if you don't know anything, do nothing. Put your money in the bank and wait. I always would just look for cheap things to invest in. I didn't care about where they were or what they were. It never occurred to me. I thought everybody did that. I would find markets that were cheap and I would invest in them. Some of them were considered strange. I can remember when Germany was considered strange to American investors. But I was just looking for cheap places, cheap things, and I would invest in them. Then people heard about it. They said, oh my gosh, you must be crazy. But they kept working. And so people said, oh, he's Indiana Jones. He goes to places where other people don't go and looks for adventure. Yes, I did look for adventure in my own life as well, but also in my investing life. But it wasn't looking to have a name. It was just looking for something cheap.
In the video, Jim Rogers provides advice on how to survive in the world of investing. He emphasizes that the key to success is to invest in what you know and understand, rather than listening to other people's advice or recommendations. He argues that if you invest in something you have knowledge and understanding of, you will know what to do if things go right or wrong. He also advises that if you don't know anything about investing, it's best to do nothing and keep your money in the bank. However, if you're really interested in investing, here's a short tip on 10 things you can consider before you make investment decisions, according to a post by U.S. Securities and Exchange Commission. 1. Draw a personal financial roadmap. 2. Evaluate your comfort zone in taking on risks. 3. Consider an appropriate mix of investments. 4. Be careful if investing heavily in shares of employers' stock or any individual stock. 5. Create and maintain an emergency fund. 6. Pay off high-interest credit card debt. 7. Consider dollar cost averaging. 8. Take advantage of free money from employer. 9. Consider rebalancing portfolio occasionally. 10. Avoid circumstances that can lead to fraud. Considering all these tips can help you skyrocket your way in investing and not falling into a trap of losing your hard-earned money. Rogers also mentioned that he has a strategy of looking for cheap things to invest in, regardless of where they are or what they are. He said that he has invested in markets that were considered strange or unconventional by other investors, such as Germany. He also mentions that people thought he was crazy for investing in these places, but he kept working, and eventually, people recognized him as a successful investor. According to Rogers, he looked for adventure in his own life and his investing life, but it was not to gain fame, it was just to find something cheap. Overall, Rogers emphasized the importance of understanding and knowledge when it comes to investing and not being swayed by other people's opinions or recommendations. Listen to these carefully.
Well, I can still pay my bills, and that's a holy grail. Yes, I did want to retire young. I wanted to have more than one life, and so I did achieve that. And I certainly didn't. I stopped working at an early age, stopped actively working because I wanted to seek adventure. I wanted to see the world, and so I did that. That for me was a holy grail. Uh, some people think that's crazy. Some people think I should still be sitting in front of a computer on Wall Street. History shows that when countries get overextended, either economically, militarily, politically, whatever, they usually peak and go into decline. I'm not talking in my opinion. This is a simple historic fact. 100 years ago, Britain was the richest, most powerful country in the world. There was no number two. 50 years later, it was bankrupt, literally bankrupt. The IMF had to bail out what had been the richest, most powerful country in the world. Go back in history. It has always been changing, and it always will.
Yeah.
When countries get overextended, they usually wind up in decline. Well, what should we do? We should cut spending with an axe. No, with a chainsaw. We have this gigantic debt, and it gets higher every day. We should cut spending. We should start reducing our debt. Are we going to do it? Of course not, David. Come on. If you ran on a policy in Washington, maybe you would get elected. But after a short time, people would say, wait a minute, this is very painful. We don't want to do this anymore. Nobody likes pain, even if they know what's good for you. So no, is America going to do it? No. I mean, I wish we would, but I know simple facts. Well, America is certainly, if you said to most people in America, where do you want to go? They would say America. Where do you want to invest? They would say America. But that's because most people still don't know the facts, just as many people did not know the facts about the UK or about other countries that peaked and went into decline. Yes, no, America's great. We've got great PR, great movies, great TV, great lots of things. But that does not mean that beneath the surface there are not serious problems developing. David, I said I have teenage children. I don't like it. It's a good time to be an old American. It is not a good time to be a young American, in my point of view. Well, what happened was we had the longest bull market in American history. Starting in 2009, things were great in the U.S. That's the longest in American history anyway. It doesn't mean it can't last 40 years, but it never has. Countries always when things are good for a while, people get overextended, they get overconfident, they think new investors come in, new investors call their friends and tell them, oh, I've discovered this new thing called the stock market. It's so much fun, and you can make money, and it's easy. It's easy to make money, and that's always happens at the end of bull. It always has happened. It's happening again. Things get overextended, things get expensive, and we always have a bear market. This is not the first time this has happened, David.
Rogers discusses his personal experience of achieving his goal of retiring early and traveling the world, which he refers to as a holy grail. He talks about his concern about the current state of the United States, stating that historically, when countries become overextended economically, militarily, or politically, they tend to decline. Rogers expresses his belief that America is not facing its economic problems and is on the verge of decline. He mentions the current high levels of debt and the lack of action to reduce it. This led him to say that now is a good time to be an old American, but not a good time to be a young American. Listen to these carefully.
Well, back to what I said before, they should only put their money where they themselves know a lot about where they're putting their money. Otherwise, when things go wrong, you don't know what to do. And things probably will go wrong again. You mentioned the 70s. David, we had big inflation in those days, and as you point out, it's worse now. David, in 1980, the interest rate on United States government treasury bills was over 21%. That's not a typo. They had to raise interest rates what would be extremely high now in order to kill inflation. Interest rates are nothing compared to 21% now. So if we're going to solve this problem, we're going to have to face a lot of pain. Do I like it? No, but I have to deal with facts. less than 2 years ago that the Federal Reserve was saying there's not going to be inflation. And then they said, oh, it's temporary. Don't worry. This is transitory. These guys don't know what they're doing. Most central bank officials or bureaucrats or academics, they don't know how the world works. They just want to preserve their job. But you said they've raised interest rates. Sure, they have. But I repeat, they were 21% on treasury bills, short-term treasury bills last time around. So no, we're going to have a lot of pain before we solve this problem. No, the biggest risk of the central banks, not just the Federal Reserve. The guy in Japan has said, he will print, his word, unlimited amounts of money. And he does. Goes to work every day and prints as fast as he can. We have a lot of central banks doing things like that. Therein lies our problem. Whenever you have a lot of money printing, it distorts markets, it distorts inflation, it distorts interest rates and gigantic debt. In 1980, America was a creditor nation. We were still a creditor. Now we're the largest debtor nation in the history of the world. Big things have changed since then, but not for the good, at least not as far as an American, which I am. No, I see what's happening. There was no red. There was still red China then. There was still Soviet Union then. A lot of huge things that have changed in the world.
In this short clip played, Rogers discussed the issue of inflation and the potential for economic pain. He mentions that in the past, high interest rates were used to curb inflation, but now interest rates are much lower. He also criticizes the Federal Reserve and other central banks for not knowing how to handle the current situation and for printing too much money, which can distort markets and cause inflation and high levels of debt. This led to him saying again that America was once a creditor nation, but is now the largest debtor nation in the world. According to Rogers, he believes that things have changed for the worse since the past, and that there is a lot of pain ahead. That's all for today. Kindly let us know your thoughts about everything discussed so far in the video in the comments section below. Remember to hit the like button and subscribe to our channel. Anticipate our next video update. Thanks for watching,